You borrow $400,000 to buy a house. Over the next 30 years, you hand back $924,000. $524,000 of that never touches the house. This is not a scam, and there is no fine print. It is the standard product at the rate a normal buyer was quoted this week, 6.65%, August 2026.
So the bank takes $500,000 off me. That is robbery.
That is the obvious reading, and it is the wrong one. I am the one in the cap. I add up the numbers people quote at you one at a time. Nobody pockets $500,000. That number is not a fee. It is a price, and the thing it buys is not the house. The interesting part is not how big it is. It is when it gets taken. Your payment is $2,568 a month, every month, for 360 months. Look at the first one. $2,217 of it is interest. $351 reaches the house, 13.7%. Nobody chose that split. Interest is charged on what you still owe, and at the start, you owe all of it.
Fine, but that evens out. Later, the payments go to the house.
Later they do. 10 years in, you have handed over $308,000. You own 14.9% of your house. Half of it becomes yours in year 21 and a half out of 30.
Then take a shorter loan. Problem solved.
Watch what the length is actually doing. 15 years at 5.95%. You pay back $605,000 instead of $924. The gap is $318,000, and the monthly payment goes from $2,568 to $3,365, $797 more every month for 15 years. I'm not telling you which to take. I'm showing you what the price tag is attached to. Because you are not buying a house on credit. You are renting money. The rent is charged per year, and the number of years is the thing you're choosing. Stretch the loan, and the monthly number gets kind. The total gets brutal. That is the whole mechanism, and it is not hidden anywhere.
Every country works like this. This is just what a mortgage is.
No, and this is the part that surprised me. A 30-year loan at a rate locked for all 30 years barely exists outside the United States. In Canada, you fix for 5 years and renegotiate again and again until it is paid. In Britain, you fix for 2 years or 5 and then you float. Denmark is one of the very few other countries where a 30-year fixed rate is a normal thing to have. One thing before the turn. Subscribe, and the next one of these finds you on its own.
So America invented a better product. Good for America.
It was not invented. It was legislated. Congress authorized 30-year terms in 1948 for newly built homes, and in 1954 for existing ones. Before that, the average federally insured loan ran about 20 years, and it did not reach an average of 27 until 1959. Here is why that matters. Somebody has to carry the risk of promising a price for 30 years because nobody knows what money costs in 2029, let alone 2056. In Canada and Britain, the borrower carries it and pays for it every time the fix runs out. In the United States, 2 government-backed companies, Fannie Mae and Freddie Mac, stand behind the loan and carry it instead.
Then it is a good deal. Somebody else eats my risk and my payment never moves.
Denmark took the same problem and answered it differently, and the difference is worth 60 seconds. A Danish mortgage is tied to a specific bond, and the borrower is allowed to buy that bond back off the market to clear the loan. When rates go up, the bond falls below face value. So the Dane whose loan is funded by a 2% bond can watch it drop to around 85, buy it back, and wipe out roughly 15% of what they owe. Rates rise and their debt shrinks.
So the Danes just built a better mortgage and America did not. Say that then.
Not better. Different, and the difference has a name. Your fixed rate protects you when rates rise, and it also chains you to the house. Sell, and it is gone. Move for a job, and you hand back the cheap money and buy at whatever the rate is that morning. The Dane can carry the gain with them. You cannot. That is the trade, and it was made for you in 1948 and 1954 by people who decided a household should not have to guess what money costs in 30 years. It is a defensible decision. It is just not a law of nature, and it is not free. You pay for it monthly for 360 months, and the receipt is the $524,000 that never touched the house.